Lendlease Global Commercial REIT announced their financial half-year results on 4th February 2022. They also proposed on Valentine's Day to acquire the remaining interest in GEM. Is it a good time to collect this REIT now? My view is no, as I would like to have more safety margin before collecting. Let's see why. I will be talking about Lendlease Global Commercial REIT, L-REIT in short, with stock code JYEU. As always, this is not investment advice. The 5 parameters, including the debt-related parameters, of L-REIT are shown. In my opinion, they are quite good. Even though PB ratio is more than 1, it seems to me that the share price is fairly valued currently. Their average cost of debt is at 0.92%, which is great. However, there's a need to be concerned on the debt maturing over the next 2.5 years as cost of borrowing is set to increase moving forward. It's not mentioned how L-REIT will deal with the debts maturing in FY 2024. Hence, there's a high chance that it will affect the DPU later as the cost of borrowing is set to increase. That's something to keep in mind for investors. Next, we will look at the technical analysis of L-REIT. We are looking at the weekly candles chart here. The share price is on the uptrend since March 2020 and its share price now is supported by the uptrend green arrow. We are looking at the daily candles chart here. The black horizontal support zone is included. The share price has been going sideways since July 2021 and recently broke the black horizontal support zone with a bearish engulfing pattern. However, the share price is still supported by the diagonal green uptrend arrow. A probable scenario is that the share price will consolidate near the black horizontal resistance zone, waiting to break out of it as it continues the uptrend. So if you are a trader, most likely you will be waiting for a bullish signal to break out of the black horizontal resistance zone as shown by the orange circle. Do subscribe, like and turn on the notifications if you enjoy the content. Thank you. Let's continue by looking at the key highlights of the proposed acquisition of GEM. All the points are very attractive and I will zoom into what I like for some of the pointers. First is the direct ownership and full control of GEM. I was looking at the financial statement on their financial half-year results. As a non-accounting trained person, it seems that L-REIT was making lesser net property income. However, it turns out that GEM was not directly owned by L-REIT currently. Hence, the income from GEM is accounted for in a separate line. Taking into account of GEM's contribution, the distribution to unit holders is actually more when compared to the same period last year. With the acquisition completed, property income from GEM will be expected to be included into one liner of net property income, hence making it easier for a non-accounting trained person like me to read the financial statement. Another point that appeals a lot to me is the contribution from GEM's office component. It is fully leased to the government till year 2045. The GEM office made up 12.9% of L-REIT's portfolio, hence strengthen the resilience of L-REIT. On a side note, I also like the increase of suburban mall percentage in L-REIT's portfolio as it is convenient for people staying nearby to visit GEM. This will also contribute to L-REIT's resilience. I would also like to touch on the strong alignment of sponsors' interest with L-REIT's unit holders. L-REIT's sponsor currently holds approximately 26.5% indirect interest in L-REIT. Hence, it is in their interest to get good assets into L-REIT's portfolio. In this case, GEM is definitely a good asset to be included into the portfolio. There are a few points to take note with the acquisition of GEM. The net asset value per unit actually decreased due to the increase of units issued. After the acquisition of GEM, the gearing ratio will increase to 40.7%, and this means that there's a high possibility of equity fundraising if L-REIT wants to acquire assets like Parkway Parade and Paya Lebar Quarter. I would also prefer a REIT to have less than 40% gearing ratio so that the REIT can take on more debts due to unforeseen circumstances. To summarize, what I like and dislike about L-REIT is shown below. Please pause the video here if you want to take some time to recap. With these points in mind, I will not be collecting L-REIT as I would like to have more margin of safety before collecting L-REIT due to three reasons. Number one, their PB ratio is slightly more than 1 currently, hence it's not cheap. A reminder that our aim is to collect fundamentally strong REITs at a fantastic price so that we can have both capital and dividend gains. Number two, it is not mentioned on how L-REIT is handling their debts for FY 2024. Number three, the gearing ratio is above 40% after acquisition. This is a list of reference I have used to create this video. Do subscribe and check out my other videos. Have a great day ahead.